Are you paying too much tax? Are you writing these painful checks to the government every year and it breaks your heart? Well, if you're a successful physician, business owner, lawyer, salesperson, you name it, if you are successful, chances are I can almost guarantee that you are paying way too much tax, and this is where investing in real estate can really help, and that's what we're covering today. And if you have any questions about what we cover, just hop on over to callseth.com and we can set up a one-on-one Zoom call for about 20 or 30 minutes and talk about your individual situation. Before we get going on all the good stuff, we have to understand how the government views real estate and what their opinion of it is. So the government, in their infinite wisdom, decided that a residential property, its value will go to zero in 27 and a half years. And if it's a commercial property, so let's say a large apartment complex, it will go to zero in 39 years. Now, as generally smart people and as real estate investors, we know that real estate is an appreciating asset. So over the long period of time, discounting bumps in the road as the market expands and contracts and all that stuff. But over the long term, we know that real estate appreciates. So on one side, the government's willing to credit us because they think real estate's going down to zero. But on the other hand, we know that over the long term, real estate appreciates and goes up. This is where the excitement really happens, because this is depreciation at its finest. So we know that the government recognizes that real estate will drop down to zero, and they're willing to give us a credit on our taxes so we can actually deduct that from our income because they think the value is going down. So let's say this is the long-term period. Let's say this is 39 years. They're willing to give us a credit every year. I'm not going to draw 39 check marks or checks on here, but you get the idea. So over the long term, we can take these depreciation credits and front load it so we can take it all at once on day one. And what this does is this gives us a huge bang right at the start, and it basically wipes out our taxes, or we can save it up for a future date to basically wipe out future earnings. Now, this is where things get really exciting. So there's something called cost segregation. And what segregation, spelling and writing while live on camera is not as easy as it looks, because I'm a stickler for proper spelling. So cost segregation, what we do is we send an engineer to do a very official report, and what that engineer does is he or she will take the piece of property and separate the components, the non-real estate components, from that property. So we will separate plumbing. We will separate wiring, flooring. We can separate light fixtures, appliances. And the beautiful thing about this is, you know how we have a depreciation schedule over 27 and a half years or 39 years for a commercial property? Well, all of this will depreciate over 5 years. So again, it's taking that front loading of the depreciation, but then putting it on steroids because we've removed all of this stuff from the property and compressed it and really condensed it into this 5-year depreciation schedule, which then gives us more cash flow up front. This is the really amazing thing. And I forgot to mention parking lots. Parking lots can be depreciated, if you can believe it or not. So if you have questions about cost segregation, just go over to callseth.com and we can set up a call, and we can talk about this stuff for hours and hours and hours on end. So why is this important? Well, it's called the time value of money. I know that $1 today is worth far more than $1 5 years from now, or even 10 years, or even 27 and a half or 39 years from now. The reason is inflation. Inflation, let's say inflation is at 3%. Every year, inflation is going to chip away and eat away at the value of that dollar 5 years, 10 years, 27 and a half years, 39 years from now. So I would rather have that dollar today because that dollar is worth far more. So the government, by allowing us all these depreciation tax credits, they're basically giving us more valuable money up front, and we can go ahead and use this to invest in more real estate and take more and more depreciation. So the most beautiful formula in real estate is more depreciation equals more cash flow. And cash flow, as you know, is the pinnacle, is the epitome of real estate investing. The more cash flow I get today, because my money today is worth far more than it is tomorrow or 5 years or 10 years from now, the more money I can use today, the better it is. And if we can wipe out our taxes at the same time, I am a happy camper, and I want you to be a happy camper too. So if you're ready to start investing in some real estate, head over to callseth.com, and we can talk about some investment opportunities for you that might fit with what you're looking to do. So I will give you an example. So let's say you invest $100,000 in a 350 unit property. Because of depreciation, cost schedule, all that front loading of the tax credits, you will receive, let's say I'm talking about an example property, it's not going to be exact numbers, but you will receive, let's say, roughly $70,000 in tax credits. That's great. You can, if you are earning $1 million a year, you can use this on day one and wipe out a portion of your income tax. But while at the same time, you are still receiving, because this is cash flow real estate, you'll still be earning, most of these deals pencil between 10 and 15% for cash on cash return. So let's get this straight, because this is where things get really exciting. You've invested your money. It's in the most secure asset you can invest in, which is commercial real estate. You get all these tax credits and wipe out a significant portion of your tax, and you're earning a dividend. So you're getting paid by your money, it's going to work, while you're paying no tax. This is the most amazing thing ever. So you've invested $100,000, you're getting 70% back in the form of tax credits, and you're still earning a return on your money. Now, there is something called a recapture tax when you sell the property, and you're going to have to account for that. But this is where things get really, really, really exciting. So let's say on year one, and then we'll have year two, year three, year four. Year one, you invest $100,000 and you get your $70,000 tax credit. That's great. You're still earning return on your money. Year two, you invest another $100,000 and get another $70,000 in tax credits. That's $140,000 in tax credits in 2 years. Same thing, year three, another $100K, and then year four, another $100K. $280,000 in tax credits over 4 years. Meanwhile, your money's going to work, earning, let's say, between 10 and 15% return. And you are making money while paying no tax. So the tax credits, the depreciation has wiped out any tax you would be paying on that. And the best thing about this, you are busy being an expert. Maybe you are an amazing physician, amazing lawyer. Everybody wants to work with you. Maybe you run an amazing business. Let's say you're a lawyer, a physician. You are being taxed as earned income. That's active income. Real estate, you're paying capital gains, so your tax rate gets slashed again. So this is why I get so excited about real estate investing. If you're paying way too much tax because you are being a successful person, real estate investing can be a great place to secure your capital. So capital preservation. Capital preservation, number one. Number one rule in investing is never lose money. You don't want to lose your money. And then we have tax credits, thanks to depreciation and cost segregation. And then we have cash flow. Let's do the F there. There we go. Then we have cash flow. So your money's as safe as it can be. You're wiping out any tax obligation, and you're earning cash flow on your money, and it's going to work for you. Stocks can't do this. Traditional investments can't do this. Real estate investing this is why the wealthiest people in the country and in the world invest in real estate for this very reason. So I hope this covered and answered some questions about depreciation and cost segregation for you. And if you are interested in investing in real estate or just want to chat more about this topic, head over to callseth.com and we can hop on a call. Have a great day.